So now let's look at today's chart of the Australian versus US dollar. And let's apply all the tools. Now I'll take my time here and really thoroughly try to apply all the tools. And let's see if there was a trade setup today. It's now at the end of the day, but let's see what we had. So here's our weekly chart again, just to start with our overview, look at where we are. Are we trending? Are we ranging? Is there any obvious levels being tested, right? So I'm really going to go slow here and go through the process. There's an obvious resistance level. Now I'm not so concerned with, for example, levels like this. I notice people sometimes will mark levels that after a while are not really being respected anymore. That one's not so bad. It did resistance act as support, and then it got broken. But I would update that with the more recent information that this was the support a little more clearly. This is a weekly chart, so that's quite a jump. That's the recent support that was broken and could act as resistance going forward. So I wouldn't go too far back in levels that eventually, there was a change. Just really want to go off the recent information. So here is a resistance that now is just being tested or just almost there. So we want to keep that in mind. And, just mark some obvious stuff here. That's not going to be tested anytime soon today, but all right. Now, what else can we draw here? Is there any fibs we can draw? I don't see any, but just to show you what I would have done here, I could draw from this very obvious swing, and I would have this fib zone. When I say I don't see any, meaning that, there's no area being tested. And, of course, some people may use other fib levels, which is more common, and I just like these two as the zone. So for me, if this isn't being tested, there's no fib to really consider at the moment. But I can leave that box there in case we get up there as a reminder. These levels are really not going to be tested, so just to kind of show you. All right, let's go to the daily now. Again, fib here would be a pretty obvious one to draw, but, we're not there. But if we were testing that area, that would be relevant. Okay. Go to the daily now, taking our time. And we can clean up these levels now that we have a little closer view. There's the resistance. Almost tested there. What else do we see here? Again, here's the fib that's already drawn. Let's just tighten that up. Now we can start drawing zones, those boxes, but they tend to be pretty big on the daily. But they do apply. For example, if there was a lot of selling here, particularly before, but just as a resistance zone, and if we come up to it and we see weakness starting to come in initially as soon as we touch these levels, it's more likely to reject. But again, on the daily, this is, they might get really big. This is actually not very big. And I'm drawing it, from this whole range. Really, I should be drawing it right there. So again, covering just the pin areas and not the bodies. So there would be a level to look at, a zone of possible sellers and give you some information. Again, if they're not active in here, it's more likely to break and continue up. All right, so support resistance, very simple how we have that marked. Let's go down a little further. 4 hour, anything stand out? Obviously the support. We start to look at the previous day's high and low in particular. This is the previous day's low. And we went over the weekend. Today's Monday. And then here was today. There actually was a setup early today, so we'll get to that. So here's an obvious recent support. And again, I didn't mark it off of this one. This is the more recent. And I could put a box there and particularly look at the behavior as price came down here to see if that was maybe a long opportunity of support. Now, what phase are we in? Now, let's get to the 1 hour. When I say phase, right, we're talking about accumulation, distribution, markup, markdown, reaccumulation, redistribution, all that stuff that we covered. So let me just check this recording. Okay. So what phase are we in here? And again, now we get to our 1 hour, and we can see our recent high volumes and what do they tell us? And also, are we obviously trending or not? So looking at, 1 hour is a nice overview, again, to see at this point your phase and your volume information. So do we see a clear trend here? No, we don't, right? And again, doing our analysis as if we were starting today, Monday, we would say that we are basically in ranging conditions, right, very clearly. And again, it's because of our high-low structure. Now, we are making higher highs and higher lows there, and then we completely reversed that range. We didn't retrace and continue, right? We came all the way back to where we started. That was just Thursday. Friday, we sat in the middle of this whole range, right? And then we came down to this point today. So we could say that today at market open, and this marks the weekend here, these two lines, we could say that today at market open, price was in ranging condition, right, and at support. Now, that gives us an opportunity to buy. Now, I don't think I really covered the ranging stuff, right? So this is a perfect opportunity to get that covered now. Now, the ranging condition, again, can be very obvious by price, and seeing that, there's a support and resistance, then price is not making, progress, in a direction. But also volume can confirm that the buying and selling, let's get a little closer, buying and selling is both active. And that's why you have ranging conditions. So again, if we think about our principle that lower prices attract buyers, or they may attract buyers, if we see the volume reaction, we see the rejection in price along with it, we know that lower prices are attracting the buyers. And then as price moves up, and those buyers are, attempting maybe a markup phase, we run into sellers. Those higher prices attract sellers. And again, the high volume shows up, the rejection and resistance forms. And if you see that close together, you're very often going to get into a range. And you can see constant high volume into down moves showing professional buying, and high volume into up moves showing professional selling. Now, there may not be a consensus among smart money. They don't, conspire at the beginning of every day they just operate similarly. And some may be selling into an up move, and others may be buying into the down move, and it can create that ranging condition. Another way to look at it as far as the market principle of the range is that we're talking about the balance of supply and demand. Of course, supply is selling, demand is buying. So the balance of supply and demand, and that the market would be more in balance instead of out of balance. And remember, when we want these setups and we want the price to trend for us when we get into a trade, we want to see the supply and demand imbalance, right? So, for example, we see smart money buying, and then we see a lack of selling and a no supply signal, the most common signal, right? So demand in large amounts and the lack of supply, right, gives us the imbalance, and that gives us a trending move upward as the market moves up in search of supply and balance, and that becomes, a move that we'd like to capitalize on, with that imbalance causing price to move up. So ranging conditions, again, is the balance of supply and demand, showing that there's similar buying and selling as prices ranging. And you can very often predict a range when you first see these signs. So you can be ahead of the curve here and say, okay, price is most likely to range. And nobody would know that because it could be in a trending condition. Who knows, really? That's hard to predict, right? Price is going to range. I mean, who really makes that prediction? So let's take a look here at even just the end of this range and what we see. And again, our 1 hour overview, we don't have to get really close into detail. We're following the storyline. 1 hour is great for that. You could always look in smaller time frames as well after to see more detail. But let's look at that general idea that lower prices attracted some very high volume here, for example. There was no continuation down. Price did come down a little further, but was rejected, and if anything, became a little fake breakout of that initial support, right? So the higher volumes in this area, particularly high for that time of day, actually we're seeing this more of a regular thing lately, a little more activity, but that's particularly high there. And again, the reaction, it didn't continue down, and the reaction, as we know, cause and effect. The reaction to lower prices and high volume is, effort versus result is a bounce. So buyers at support, right? And I just want to point this out because it just jumps out at me. You get used to looking at this stuff. Look at the fib retracement, right? Just kind of following that this was potentially a setup here with the strength there, right? And again, our fib retracement comes into play, and we see higher volumes there. And we've already seen the positioning, the buying, and again, this would be an opportunity where you may want to go to the smaller time frames after seeing buying coming in our fib zone with strength in the background, and look for that entry long, right? So just to point that out, and you see the extension there going to the 50. You get these very often symmetrical moves that can help you with targets. So it never hurts to do that. You could either draw the line, or you can use the fib extension. All right, so let's just follow the storyline. Talk about what created a range. Now look, as price moved up at that point, not surprising in this area based on that projection we just had too. Also, if we draw a fib from this high to low, I want to catch the trend there. It's popping above 618, but generally, as that extension was hit, what do we see? High volume. Not extremely high, but absolutely high enough to tell us with this pin bearish reaction, initial the bearish reaction confirmed, weakness, right? There was some selling here in some decent amount. Okay, this is 20 GMT, which is not the most active time of day. So you got to consider time of day, right? That's pretty high. Okay. So we can say there's a lot of buying, this was accumulation. As it marked up and pulled back to a fib and found buyers, we'd have to call that reaccumulation as it started to mark up. And then it hit a point where it did run into some selling. Okay. So that is typical of ranging conditions. It's not surprising that the next day we stayed within this whole price area. All that could have been different if at this point we did not attract high volume. Let's say volume was down here, or we continued to test higher prices and we didn't see higher volume at higher prices, we'd be more likely to just trend upward. But we found supply in a decent amount. We found that demand, and so going into the next day, it is more likely to range within this price area. Because why? Higher prices are going to tend to attract sellers and reject. There's another sign that sellers were active into an up move, rejecting with a pin. And look, again, this is a good example to mark that. Right? So again, sometimes it doesn't go to the ultimate resistance, and that's why we draw these boxes to say once it tests here to start, we can already start treating it like it's testing resistance. It's a resistance zone or supply zone. So there's a good example of that. It also looks like a little fake break of this little high, which happens a lot. So we got a couple of things in there. The higher volume there telling us, okay, selling is still active here, but what about all that buying back there? Did they dump all those positions? Are they still in it? And unless we see a very high volume, we have to assume they're still in these positions. They had a couple of chances, and remember how much buying was here, lots of activity, and then the reaccumulation. So we have some buying and some selling, right? So, again, ranging conditions. As we come down, what do we see? Buying again. Look at this little support. What is the pattern? All together now, fake breakout. And you see the high volume, pin, little fake break of that support, bullish reaction. So again, some buying, right? So how does that help us? How do we trade that? We look to sell off the highs and buy off the lows. Very simple. When we're in the middle of the range, right, I would absolutely not look to take the trade. Unless, we're getting like some very aggressive buying or something. But typically what can happen in a range, because that's our equilibrium area. So typically you can get stuck in the center. So looking to enter trades in a range, you want to look for strength off the bottom to signal you to get in, or weakness off the top, right? Particularly you can look for fake breakout patterns or just simply, the test of the zone and a proper reaction. So now let's look at today and what was the opportunity. Now this is not typically a time of day to trade, but the activity was certainly shown as being there. which has been happening this time of day with this particular, with the Australian dollar. The market goes through these different moods. So, the volume giving us a clue here that it is tradable, that it is very active this time of day lately. We see that. So what does that tell us? And the market is open for Australia here, and Japan, just not the U.S. and Europe and all that yet. So we're, early Monday. But look what happens here. Lots of activity. Okay, we get into our support. We get into the support zone, and we see high volume bullish reaction. And even this one tested, down to the ultimate support. There's that bullish reaction, that pin rejection, and that bullish reaction to the high volume down, which confirms our strength. So we see buying at support in a range, right? Now, just looking at this two-candle pattern, again, it's our key area. We saw a lot of buying here. We can play the ranging conditions and look to buy off support. So now we have, particularly once this candle closes bullish as a two-candle pattern, we have confirmation of strength, and we can look to enter, right? Typically, I'm looking to enter at support resistance and fibs. There will be rare cases where it could be simply a pivot and, proper volume and maybe some sort of, pattern. But typically, it's going to be that, I guess, maybe 80-90% of the time. So let's look in here. On our 5-minute chart, we're going to keep it simple, not use a million time frames when it comes to this detailed stuff. And the first thing we want to see is, let's confirm what's going on in here. Let's confirm this is where we saw that strength here early today, Monday, on the 1-hour chart, right? Let's see if that confirms on the 5-minute chart. That is our next step. We found our opportunity in our to get into a trade. We would say in real time on a 1-hour, and then we can go to our smaller time frames as the next step. So watching it come into the zone, right? This is a perfect example. Looking at the behavior when it touches that zone, when it first enters, not just when it comes to that support that everybody else is waiting for that never got touched. But you get some information here, some very high volume there, right? As it came in. So that's, again, the buy area, the buy zone. We see the pin rejection. We see the high volume. We know that smart money is positioning long, again, off the support. 5-minute tells us as well now, right? And we had strength on the 1-hour chart. Again, as we go lower, and we tend to note that also high volume support resistance is particularly something to watch, and fake breakout. So we come back below it, and at least we have some healthy volume, higher than the previous three. Nice pin, bullish reaction, little fake breakout pattern on the 5-minute as well, right? So we see the buying going on in this area. Also, one thing to note, what's our automatic rally, right? Automatic rally, first level of resistance after strength. So here's our strength. Here it is in the zone. Here we'll be watching for our setup. And what's the first level of resistance after that strength in our trade area? Here, right? Because we bounce up, automatic rally, right? It rallies, and then it came back down. So we have our resistance, at this point in time, as price came back down, we'd be able to mark that in real time as our automatic rally. What can we note about the volume with the automatic rally, as we know? Did higher prices attract sellers? Is the automatic rally set up on high volume? Remember, it's a test for sellers. Did it set up on high volume? Is it showing high volume selling? Or what is it showing? As it comes up there and rejects, what is it showing? Lack of activity to the sell side. That's what we're testing for at this automatic rally. That's why we pause. That's why as much buyers as there was, why did price come back down? Why didn't it just shoot up? It did it a few minutes later. Why not now? Because of the test for sellers. And that's why that level is so important. So now we have a very healthy condition, right? Just remember, what I'd already shown on the 5-minute entries. So this is just today, right? So we have a very healthy condition showing buying, fake break pattern, pin rejections, and higher volumes where they need to be, and lower volumes at the automatic rally. Notice it's not big pin rejection, it's not big high volume, so it's very clear that there's buying and we have a healthy condition. Now remember, the 1-hour chart was just coming around showing stopping volume and looking for a bullish reaction, okay? So that's what's happening through here. Now, let's talk about our entries, right? Now the first entry is a no supply. Now, where's the first no supply? Here. I would consider this no supply very aggressive. I would most likely not take this trade here. Very aggressive because of two things, basically. The 1 hour chart did not have time yet to show the two candle pattern of down, high volume, bullish reaction, second. So this is very early. So the 1 hour chart has not confirmed the strength that we didn't give it time. Second thing is that this is testing into the low area here. Remember, this is not where I look for no supplies. I look for a no supply as price starts to pull away from the strength, from the low price, from the high volume, low price. As it pulls away, as it starts to pull up, right? That's where I'm looking for the test for sellers and the no supply. So that's, and I say no supply, right, because this volume lower than previous two. It's after strength. It's confirmed here, and that would be an entry. Very aggressive, very early. So where's our next possible entry? Now, this is a good example to point out that this was a potential no supply. Again, low. I'd rather see it higher. But my point here is volume lower than previous two, down candle. We had some strength. Okay, so you could call it a no supply, even though it's a little low for me, and into this pin area and where I'd like to see buyers. It got canceled out with a close below to follow. So that's just to give you that example. Potential no supply, by definition, but moving below and closing below the low of the no supply canceled it out. So just to show that. So you wouldn't have been tricked into an entry there. And again, I'd like to see it start to pull away first. And when I say pull away, you know, stuff like this. So now, moving forward, where's our entries, right? So those are really aggressive. This one didn't even confirm realistically. So where am I looking to get in? Now, automatic rally is the next thing comes up. There was not a no supply in here. No supply here would have been nice as we pulled off of this bottom, right? Get a no supply. Had our initial automatic rally, no supply there. Common, but that didn't happen technically. But what happens here? And what's our next, you know, what's our first opportunity to get in? The close above the automatic rally, right? The push through or effort to rise, pushing through the automatic rally and closing above. And you can see these were sort of dipping their toe in there. Now remember what we talked about. The automatic rally marks the switch over between smart money buying into down moves and then switching into buying in a way to try to mark up price because they've already positioned and tested for sellers and the sellers have dried up, right? So we're seeing it all in real life here just today. And that is our entry because it's the push through the automatic rally. What are the requirements? Again, as I've said, the definition, what are you looking for when you push through here to enter? You can't have high volume, so no high volume, and we're good. And we don't want a pin rejection. We want to close near the high, and we did that. Let's zoom in. So you can see there it's almost a non-existent pin closing at the high there. So that is our valid entry. Okay. Also, let's take note. Why did it happen? You know, let's follow the storyline. This is where they decided to test for sellers. They're not very active. Price comes down. They buy the crap out of it again. Again, automatic rally, where they're going to test for sellers. Look at the volume drop down. Okay, look at the lack of down move. Where are the sellers? So again, this tells these buyers they're not going to get these low prices anymore, and it's all clear to start marking it up. Sellers are inactive, and it's going to be less expensive to mark up. As you buy, it will move up due to lack of selling, which is now being revealed. Okay, imbalance of supply and demand, right? High demand, low supply is being shown now. So there's our entry there, fitting our criteria. Let's continue. Volume just kind of sits there, gets low at automatic rally. This is always a good sign. Low volume in this area is a good sign, right? It means that it's smart money's for the taking. It's buyers for the taking. Nobody's selling. Again, into this up move, you see a pin rejection, but look at the volume, right? Volume is key. It's not. It's only half the picture here. If you're looking at price action, you say, oh, pin bar, downtrend, sell. No. The selling is not there. The buying is there, right? So we're sitting there in low volume. We're not running into selling. And does this pattern look familiar, right? We looked at this on the template example I gave. Once we push through, we very often come back and kind of test. So you see the pattern there, just like I drew, right? Get familiar with this. Love this pattern. Get to know it. look at the low volume here. Okay, the break, test continuation pattern of automatic rally, the low volume, just like I drew. Okay, that is take a picture of that and put it on the wall. So, again, if there are variations, that would be telling us stuff. High volume rejection here. Okay, we don't want to take that trade. Higher prices just attracted a lot of sellers, right? Think of the variations, right? So this is nice and clean. And eventually, we did run into some volume popping up. But as we know, volume is going to tell us the activity increased, and what's the effort versus result? What's the result of that? Higher prices, higher prices. So we'd have to say that the buying became more aggressive, right? The market became more active, and as a result, we moved up, 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 okay? So we see the pattern there, the market liking this very low volume at this point, the buyers, and saying, okay, we're clear, let's start buying it up. Look at these candles they created, and they're steady buying now, right? Look how healthy that move is, by the way. No sellers being attracted. You see how they paused their activity at 50 EMA, tested for sellers there, not really happening, continue up. And then eventually we found a little high activity at maybe the daily pivot, right? Daily pivot. Volume got a little high up there, and we found some selling. You see why we didn't continue for the time being there, then did later. Okay. Here's more strength coming in, reaccumulation. Okay, so to finish off here, there's the entry, this official entry there with the push through. And also, this is a good example of, now, very commonly you can see how there could have been a no supply here. If this was just a little lower, it would have been volume lower than previous to on a down candle, you know, at automatic rally test, and we would have gotten our no supply there. Just by a hair didn't make it, right? But this is a good example of what I say is if you see generally the low volume test here, right, the strength, the push through, the low volume test, and you don't by definition have a no supply like we see here, it's still perfectly valid to say, you know, at this point, or really at this point, it becomes clear as day what's happening. So you don't have to be a robot, you know, you can, you know, your brain is an advantage, it's okay. So we can understand at this point really what's happening, the low volume test there, and then we continue. And as we pull away, and we have some healthy volume, some bullish reaction to that, it's all clear, right? So we've pinpointed our entry, we went through the method there, and hopefully that was really helpful for you to see that in real time. Let's see if there was anything else to show in that. So that covers it. Okay. And again, that was here as we're looking at support. We're seeing this happen on the 1 hour chart. We're saying, okay, good, we can look at our entry opportunities on the smaller time frame and see if that agrees and what that tells us from the overview, right? So hopefully that kind of helped bring things together for you there. So we'll continue any other information I can to sort of round this out for you and make sure you're able to apply all of this. So good example there. We'll continue.